Most psychological challenges with trading boil down to either being under-controlled on one hand or over-controlled on the other. On one hand, we have the impulsive trader, that's the under control, who loses control out of frustration, out of a fear of missing moves. How many of you have chased a market because you were afraid it was going to move without you? I mean, we've all done that, right? I mean, and you get the absolute worst trade location and the thing just reverses against you. It's very frustrating. That's under control. The fear is controlling you. The fear of missing the move is controlling you. You are not controlling your own performance. The trader who is under controlled, it's almost like they have attention deficit disorder. They lose their focus and they lose their ability to be governed by rules. On the other hand, we have the over-controlled trader. The trader who becomes so fearful and hesitant that they freeze. And so there's opportunity there and they won't take it. I had a situation just recently where a trader had fantastic ideas on the day. And in fact, he emailed a bunch of his colleagues at the firm what he was seeing in the market. Great ideas. They made a bunch of money off the ideas. They came over to him and they said, "Oh, you really nailed that one." Well, what did he do? He never got into those positions. He was emailing. He had all the right ideas. He never got into it. Well, you know, he couldn't get quite the right price, and maybe we'll go down a couple more ticks. He's so anxious about losing money that he never took advantage of the opportunity that he had identified. There's such a need for safety that he couldn't take risk. Attention in that situation becomes self-focused, and so they're not absorbed in markets and not able to act upon what they see. Most trading problems boil down to the issue of being under-controlled on one hand or over-controlled on the other, or sometimes people will oscillate between the two. They'll become hesitant and fearful, then they'll finally make a trade, they'll lose money, then they get angry and frustrated, and then they get impulsive, and then they lose too much money, and then they get hesitant and fearful again, and it will cycle around. So much of trading psychology boils down to techniques for establishing control under conditions of impulsivity on one hand and anxiety and hesitance on the other.
And with this powerful opening clip, we welcome you to today's feature on Brett Steenbarger, one of the most respected voices in trading psychology. This first insight captures the truth behind most traders' struggles. It's rarely about strategy. It's about the cycle of fear, frustration, hesitation, and impulse. Steenbarger reminds us that control isn't about suppressing emotion, but about staying grounded when those emotions arise. Recognizing that pattern is the first real step toward mastering it. In today's video, we'll explore the 7 core mindsets of Brett Steenbarger, one of the most influential voices in modern trading psychology. His work bridges performance science with real-world trading experience, revealing how control, discipline, and self-awareness build lasting consistency. Across the next clips, you'll see how he addresses impulsivity, overconfidence, resilience, and adaptability, the psychological framework that separates disciplined professionals from emotional decision makers. Now that we've seen how control shapes every decision, Brett takes that idea even deeper. Because behind every impulsive trade or frozen hesitation, there's often something more: the emotional need to feel the market instead of trade it. In this next clip, he breaks down 2 destructive habits that quietly sabotage performance: the addiction to action and the impulse to trade out of frustration. Listen closely. This is where psychology meets discipline in the most practical way possible.
I would say 2 self-destructive behaviors come to mind immediately. The first I would call trading addiction. People can be addicted to trading just like they can be addicted to gambling, and for much of the same reason. Not everyone trades to make money. Some people are trading for thrills and excitement, and those people do get in their own way. And much of the money that's made in trading is by being patient and waiting for your edge, waiting for your opportunity. If you have the need for thrills, you won't have that patience. You won't wait for your opportunity, and you get in your own way. The other self-destructive behavior I would call impulsivity. When people make impulsive decisions because of frustration. They lose some money, the market's not moving very much, they become frustrated, and out of that frustration, they feel a need to trade. In fact, traders call it over-trading. They make those impulsive decisions where they don't really have an edge in the trade, and they end up losing money as a result. My rule of thumb is if you're thinking about yourself or you're thinking about your profit and loss, you're in the wrong place. You should be market-focused, not self-focused. But if you don't have a relatively quiet mind, you can't access those intuitions. When traders are frustrated, they're thinking about their profit and loss statement. They're not really focused on markets. And as a result, their impulsive decisions aren't based on instinct. They're based on emotions.
That's one of Steenbarger's most powerful lessons. Real consistency doesn't come from doing more, but from knowing when not to act. Every impulsive click comes at the cost of clarity, and every moment of patience builds real confidence. It's a reminder that trading isn't just about opportunity, it's about emotional timing. And that's exactly what leads us into the next idea: how discipline and adaptability turn self-control into an actual edge in the market. After understanding impulsivity as a habit, Brett takes us one step further, into what happens when emotion becomes strategy. It's that moment when frustration turns into revenge trading, when logic gives way to the urge to win back what was lost. In this next clip, he explains how impulsive reactions and failure to adapt can quietly destroy even the most experienced traders, not through lack of knowledge, but through repetition of the same emotional mistakes.
A second problem, impulsivity. Impulsivity occurs when we act before we think. And most often, we'll be talking a little bit later about triggers, most often it's triggered by frustration. You lose some money on a trade, and what's the first thought that goes through your mind? You want to get it back. And now all of a sudden, you're trading for revenge reasons. And out of frustration, you put on another trade, and it's a terrible trade. You get a horrible location on the trade, and you lose again. Very different than really mapping out in your head what markets are doing and planning a trade around that. And finally, a third problem that we commonly see among traders, a failure to adapt to changing market conditions. I cannot tell you how many successful traders I've known and worked with who stop becoming successful because they try doing the same thing again and again and again under different market conditions. There are some times where following a trend works, and there are some market conditions where trend following will not work. Markets move differently at different time frames. There's much more algorithmic, computerized trade close to the market on a very short time frame from the market makers, especially in the stock index products. That's changed how markets move. How many of you have observed how markets have been moving lately at the end of the day, stock markets? Holy crap, what happens in the last few minutes of the day? All of a sudden, the volume expands, the volatility expands. That never used to happen in that way. If you do not adapt to those kinds of changing conditions, you're toast. Because you'll be fading something, and it will move much more against you than you could have ever previously have expected.
Here, Steenbarger exposes the silent trap that ruins consistency, reacting instead of adjusting. The more we trade from frustration, the less we see the market for what it really is. Adaptation, not emotion, is what separates a professional process from a personal reaction. And that brings us to the next key insight: how real traders turn setbacks into resilience and use losses as fuel for growth. Every trader knows the sting of a loss, but very few know how to use it. In this next clip, Brett Steenbarger explains why resilience isn't about avoiding pain, but about learning from it. He shows how the best traders transform losing trades into insight, using each setback as a stepping stone toward long-term consistency.
What gives you the resilience is that you're treating losses as learning experiences. And because you're not erasing the memory of it, you want to remember, let's say a bad trade, a trade that goes wrong. You want to remember it because you want to learn from it. In that sense, you're embracing the losses. Now that, of course, presumes reasonable risk management, okay? But if you are making a good bet, betting this amount to make this amount, and it goes wrong, you can try to identify what might I have done differently, what did I miss, and so now the loss is not so threatening. It's there to make you better. Resilience helps us traverse our learning curves. We're going to make mistakes, and even the best traders are often wrong close to 50% of the time. We want to use losses to make us better, not to tear us down.
That's the mindset shift that turns experience into progress. Every loss contains a lesson, and every reflection strengthens discipline. Steenbarger's point is simple. Resilience isn't built by winning more, but by learning faster. And that understanding leads naturally into the next principle, why there's no holy grail in trading, and how constant adaptation becomes the real source of edge. After learning how to turn losses into lessons, Brett takes the idea a step further, reminding us that progress doesn't come from finding the perfect setup, but from adapting to constant change. In this next clip, he explains why there's no holy grail in trading. Markets evolve, correlations shift, and edges fade. And the traders who last are the ones who keep evolving with them.
Well, the basic reality is that markets are ever changing. We go through periods where markets are trending and periods where they are range bound, where they are more volatile, less volatile. In some markets, we see correlations among assets. In other markets, those break down. And so any one approach to trading tends to have a shelf life in terms of its quote-unquote edge. And so to have a successful career as a portfolio manager, an investor, as a trader, you need to be evolving with markets. You need to be finding ever new sources of edge. And so there's always research and development going on. Sometimes beginning traders hope that they find a holy grail. They look for what they call quote-unquote setups that are chart patterns that will lead them to success if they're implemented. Well, obviously, if that was the case, there are plenty of algorithmic participants who could automate that trade and profit from it continuously. But in fact, that doesn't happen, and that's not what algorithmic traders do. The advantage we would find in one market, let's say a breakout pattern, won't work in a different kind of market. And so we always need to be adapting to market conditions, and that takes an unusual amount of open-mindedness and flexibility.
That's a timeless reminder. There's no single pattern or indicator that works forever. The real edge comes from awareness, flexibility, and the willingness to question what once worked. Steenbarger's message is clear. Trading success is a moving target, and the traders who last are the ones who keep learning how to aim. And that brings us to the next insight, how top performers think differently, finding unique ways to read information and uncover opportunity. Once you understand that no single setup lasts forever, the next question is, how do you stay ahead? In this clip, Brett Steenbarger reveals how top traders think differently. They don't rely on what everyone else is watching. Instead, they develop unique ways of seeing information, turning creativity, research, and curiosity into a competitive edge.
If you look at the same things as other traders, you'll tend to do the same things as other traders, and you'll tend to get the same results as other traders. It's hard to have distinctive results when you're not doing anything distinctive in a process sense. And what we find with very successful portfolio managers, very successful traders, is that they are either looking at different information than others, or they're looking at the same information differently. And so there's a uniqueness to their perception, there's a uniqueness to their research. They're not playing the same game as other consensus traders. And that is a big part of their success. And in fact, a big part of their longevity is that they are able to find new sources of unique edge in their trading. So an example of this kind of uniqueness, there was a firm that I came across that they had access to the information from satellites. And the satellites could recognize different ships on the oceans and in ports, and could recognize what types of ships those were, and could download that information so that at any time you had real-time information about how many ships were actively shipping, how many were stuck in port, how many were oil tankers, how many were cargo ships of another type. And they could actually forecast economic activity based on the shipping activity, and clearly looking at something other people weren't. There was a portfolio manager who I had worked with who hired a number of young kids, and they would make phone call after phone call after phone call to find out about hotel rates, to find out about airplane fares. So they're looking at everything related to travel and so forth, hotel rates, and for different time frames. And out of all that information, he was able to build a model for demand and supply for discretionary spending. And so if he's seeing that airfares are really firm, and car rental prices are really firm, and hotel prices are really firm, 6 months into the future, much firmer than usual, he would conclude that there's a high level of discretionary spending, and that informed his trading decisions about which stocks to buy and sell.
That's how great traders stay original, by building perspectives no one else sees. Their edge doesn't come from secrets or indicators, but from curiosity and the courage to explore beyond the obvious. Steenbarger's insight here connects every idea we've seen so far: control, patience, resilience, and adaptability, showing that mastery in trading is the art of constant reinvention. And as we move to the final segment, we'll bring these lessons together, turning awareness, discipline, and creativity into a sustainable mindset for long-term success. After exploring the mindset, discipline, and adaptability behind trading success, Brett Steenbarger closes with one final insight: the bridge between theory and execution. Because great ideas alone don't make great traders. What matters is how you structure, size, and manage those ideas when real money is on the line.
When we look at the results of traders, their profitability, it turns out that only a modest fraction of the success comes from the actual ideas that they're trading. The ideas are important, but they're not all important. Once you have the idea, you still have to structure that idea as a good risk-reward proposition to turn it into a trade. And that's a very detailed area of exploration. So if I have an idea that the global economy is growing, that there's going to be economic expansion overseas, that will carry over to certain international companies in the US, great, that's a worthwhile idea, but where do I buy? Where would I sell? How would I structure that trade? When I think about using options and limiting the amount of premium that I dedicate to the idea, might I structure it as a spread trade or a relative value trade? I'll buy this industry and sell another industry against it. There's so many different ways of structuring an idea, so many different ways of timing and sizing an idea. Those are the mechanics of trading, and they account for a surprisingly large degree of success or failure of traders.
That's the perfect way to close. Brett Steenbarger reminds us that success doesn't come from having more ideas. It comes from mastering the process that turns those ideas into real, risk-balanced trades. It's the difference between thinking like a trader and operating like one, where every decision has structure, purpose, and control. Remember, ideas start the process, but execution defines the outcome. And before we wrap up, let's take a moment to turn all these lessons into something you can actually apply. The 7 mindset steps inspired by Brett Steenbarger's teachings. Step 1. Master emotional control. Every decision starts in the mind. Learn to recognize when you're under-controlled, trading out of frustration or fear, and when you're over-controlled, frozen by hesitation. Awareness is your first edge. Step 2. Break the cycle of impulsivity. Impulsive trades feel urgent, but they come from emotion, not opportunity. Slow down. Trade your plan, not your mood. Patience transforms uncertainty into clarity. Step 3. Turn frustration into focus. Revenge trading and overtrading destroy consistency. When emotions spike, step back and reset. Adaptation, not reaction, is what keeps professionals alive in changing markets. Step 4. Learn through losses. Every mistake hides a lesson. Review bad trades not to punish yourself, but to understand your patterns. Resilience isn't built by avoiding pain. It's built by learning from it. Step 5. Stop searching for the Holy Grail. No single pattern or setup works forever. Markets evolve, and so must you. Keep testing, keep adapting. Flexibility is your real long-term edge. Step 6. Build a unique perspective. Don't copy the crowd. Look at the same information differently. Curiosity and originality are what turn observation into opportunity. Step 7. Execute with structure and purpose. Great ideas are meaningless without disciplined execution. Define your entries, your exits, and your position size before you act. Trading success isn't about more ideas, it's about better structure. And that's the essence of Brett Steenbarger's message. Control your emotions, keep learning, and build a process that lasts. Please also remember that you're not alone on this journey. All the material in this course was developed by the ComLucro channel, built on thousands of hours of trading experience and enriched with knowledge from books, lectures, and videos you can also find here on our channel. I invite you to explore our other courses and learn from the insights of world-class traders and coaches like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others we study and share here. And in the next module, we'll go even deeper to help you understand trading decisions and how to align your mind so it works for you, not against you. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.